Welcome, Doug.
Thanks,
Good to
Matt.
see you again.
Nice to see you as well.
Very excited about this discussion today because, on a couple of levels. I mean, obviously a big part of what we are focused on and particularly in discussion with clients is around the way people make decisions because, fundamentally we found and believe that life is the sum of the decisions we make and the way we make decisions is really, really important in the compounding of that over time is really, really important. And I know you guys at Platinum have been obviously very focused on that through your careers, but a little while ago you had a bit of an interesting side bet, if you like, in terms of that, and you went through a very interesting voyage of discovery in the sporting arena. So maybe we could start by talking about how you came across Ben's work and what happened.
Okay, so I'm a bit of a rugby fan. So back in 2015, with the World Cup coming up, I came across work that Ben Darwin had produced on, it was a simple article saying he didn't think England could win their own World Cup. And being Scottish, that's probably one of our biggest hopes in every World Cup, that they don't win it, because they won the 1966 Soccer World Cup, and it was the only thing we saw on TV for the next 30 or 40 years. So that was my big fear, and his work suggested they couldn't win it because of the way their team was built. And that was interesting to me for a couple of reasons. More than the rugby reason, it was more of a professional insight. Platinum has a team, and we've got over 30 analysts working together, trying to pick stocks from around the world. And I'd joined the company back in 2003 originally, and always thought we had something special in the team. But it's very hard to communicate we have a great team, because everyone will tell you they have a great team. So when I saw that someone had a way of measuring how well a team was built, that was something that definitely piqued my interest, and that's where we started exploring it in a bit more detail.
It was a pretty big call at the time. Obviously, when it comes to rugby, New Zealand not winning is always the big sort of story, but obviously a home World Cup to make that call was because it was a fair way out from the final, wasn't it? Yeah,
I mean, this was before the thing started, and then what ended up happening was England didn't even get out the group stage, so they lost to Australia and Wales, and they were the first home team not to qualify from the group. So it was always seen that home advantage was a big thing. But Ben went away. I mean, he looks at rugby, looks at various other sports, and really looks at the way the team has been put together. And in order to do that, he's mapping every person in the team and every game they've played throughout their career and who they've played with, and has various metrics that track that. But you could start to spot, and there's lots of examples of great teams that have been very well put together. I think around the same time, Germany had beaten Brazil 7-1 in the World Cup soccer in the semi-finals, and Ben's work again suggested that was not as big as a surprise as you would think, because most of the German players had played at Bayern Munich at some stage in their career. A lot of them had gone through the Bayern Munich youth system, and therefore they had this bond, if you like, that Ben describes as cohesion, and that's what he measures. But they had this bond that meant that when it comes to times of crisis or times of challenge, the fact that you have this bond within the guys within the team, you tend to respond better, and as a result, when it came to the crunch, Germany, with a collection of guys who'd all grown up together against Brazil, who the players tend to move off to Europe very young, try and chase more money that you can receive in the European game than the home game. It's just assembling a group of guys who happen to be Brazilian, and under pressure they struggled.
But it's probably one of those examples of the old cliche of a team of champions versus a champion team. But I guess the interesting thing about that is that concept of how do you measure what is a great team and that team dynamic.
Yes.
And Ben was able to come up with a measure for that.
Yeah, so he started measuring, and it in its simplest form, you look at how many times effectively people have played together. There's more to it than that, but if you want to think of it at the simplest level, you're looking at how often people have played together. So the more and more you thinking about different sports, thinking in rugby, if the two centres play alongside each other more and more and more, they get to understand each other. They know the lines they're going to run. You hear about all these guys talking about, I popped the ball over my shoulder and he just happened to be there. But if you've played together 50 or 100 times, you've got a pretty good idea what your teammate's going to do. So measuring how many times people have played together is an important part of it. But also the idea that external experience is generally a negative in this context. So when someone has played a lot for another club, they have learned the ways that other club plays, and when they join your club, you actually have to unteach them that. So they have to unlearn what they already know, and that comes back to models of adult learning, where you start off. And I remember being a trainer on a course for a while, and one of the hardest parts for the guys who came on the course was we spent the first half of the course showing them that the way they were doing things was wrong. So they were so what you would call unconsciously incompetent. And then you had to make them conscious that they were incompetent, which is pretty confronting. So this was a course I worked in a bank for a while, and we had to have a drink with the guys before they went to bed on the first night, because everyone was at this low point. Everything they thought they knew had been pulled apart. But when they came back the next morning, they were taught how to become what was called consciously competent, and then with practice you become unconsciously competent. So you go through this sort of arc. So if someone joins you from another club in a sporting context, or joins your firm in a business context, they actually have to unlearn a lot of the ways of the firm or the team they played for before. And you can see some great examples of it. Guys getting thrown at the deep end when they in key positions in sporting contests and really failing to perform because they just don't know how the team operates. And this stuff's very applicable under pressure. When you're it's easy when you're winning, it's easy when things are going well, but as soon as there's pressure applied, people need to have that sort of cohesion within the group.
Well, this is something that's well understood in certainly the military, and the sort of 5 minutes I spent there, but I spent a lot of time studying military tactics and a lot of the that team environment, that military complexes try, and that the very first thing is to break you down, to sort of start from scratch, and not because you don't have anything to add per se, but everyone's got to start from the same position so they can build that sort of cohesion. And I guess the interesting thing about what I saw, and you know, I've seen you talk about this a number of times now with the work that Ben was doing, is to come up with a way to be able to measure that seems to be quite predictive.
Yes.
You know, and that he's been able to make, well, not only that initial call, but then you guys did some follow-up work and looked at teams around, I think it was Australia and Southeast Asia.
So it was Australia and New Zealand. We looked at the franchises or the franchise competitions, if you like, all the combination of representative and club, depending on the nature of the sport, and we looked at the results over 25 years. And again, that was a simplistic calculation to some extent. We were looking at wins and losses, but looking within the seasons, and we made some adjustments for foul play, if you like, for salary cap breaches and the stability of the competitions. But for the sports within that, which Ben had already previously done work on, the individual clubs, the clubs that rose to the top of this were the clubs that stacked up well on the cohesion measures that he calculated. So Canterbury Crusaders were the number one team. They've been incredibly dominant in Super Rugby. They've won, I think, 9 of 23 Super Rugby competitions. They look pretty good chance to win it again this year. They have produced, I think, in their time, 75 or 100 to 100 All Blacks through that period, which in that context, they are part of an even bigger system than just themselves, which is, again, interesting in itself. But there was other teams up there, Geelong Cats, there was Brisbane Broncos and various other clubs that in their own sports have excelled. And when you measure them and you measure the cohesion, you look at the way the teams have been built very well, and that's why they've succeeded over the long term.
Cohesion's got to be a bit more than just familiarity, right? So if I've played beside someone that I don't like, or if there's a number of players that are in an environment simply because their contracts overlap long enough, there's got to be lots of examples where teams have played together for long periods of time but aren't that successful. What is it about cohesion itself?
I think it's for a given level of skill you will perform better. But the thing is that you don't have to like the people you play alongside. I mean, obviously, that can help performance, but it doesn't. There are great examples. I think Andy Cole, Teddy Sheringham played for Manchester United, didn't speak to each other, but they had a very, very successful partnership on the pitch. I guess having the right motivation to perform together is more important than whether or not you like each other. Culture is something that's talked about a lot. There's a lot of attention given to build a culture, but I think people get it the wrong way round. They try and build a culture by effectively imposing a set of values or ideas on a group of people before the group has actually come together and it's easier for a group to form a culture by sticking together and developing what would be described as normative behaviours than it is to say these are the behaviours you will adopt and then trying to get the people to follow these behaviours. So the West Coast Eagles was an example Ben often uses when we talk about clubs that have been very successful but have had a terrible culture, or at least had a culture from the outside perspective that, guys on taking drugs, ending up in jail, various other things. So they weren't behaving in the way you'd think an ideal team should behave. So I wrote an article which we published on the All Blacks and the way they developed over time, and a lot's been made in recent years about the culture of that national team. It's the most successful sporting team in the world at a national level, and they had a sort of crisis of culture back in about 2004 when they were on tour in South Africa, and so the culture they have today is championed as being almost the reason for their success. But they were successful; they were the best team in the world before they had that crisis of culture. And this way the system has been built in New Zealand rugby, from schools through clubs through super rugby teams, etc., and the way that the entire country, the national identity revolves around rugby, is a bigger advantage than whether or not the guys behave in a particular way. And indeed, there are still plenty of misdemeanors by All Blacks as individuals that they can't eradicate everything. And yes, the culture has become much better, but it's not the key driver.
Yeah, well, I guess it's one of those things, I suppose, is that athletes come from all, walks of life and all sort of socioeconomic levels as well. So you can't just pick based on a skill level or athletic performance. You've got to start with that basis, and then do they fit into a team dynamic that can be successful? And sometimes I guess some of the problems that a lot of these clubs face, or these teams face, particularly if they're at high-profile sort of sports and high-profile teams, is that there's an expectation set around that for role models and behaviour and those sorts of things. And how, if at all, is there any sort of delineation between how they behave on the pitch to off the pitch, or is it really just a case of saying what matters is the cohesion on the field, and how does the rest of their lives, if at all, impact that?
So it's a difficult question to answer. I don't have enough insight on that and the measurement of how people behave off the pitch. I mean, what is happening on the pitch, and sport's an interesting laboratory because it's each sport has a defined set of rules, a defined number of people in the team. The people tend to perform a specific task, and so what you're seeing in if it's a rugby team of 13 or 15, depending on the code, or AFL of 18 or what have you, you have a specific parameter. It's actually very good from a statistical perspective because you actually measure the inputs very effectively.
Because it's consistent.
Because it's consistent.
Time,
It's when we come to businesses later on, and businesses are harder because we could grow and we can add people and we can change roles and so on. But for any given task that you perform on the field, whether you perform it on your own or whether you perform it in a group, the more often you do it, the better you become. And what really happens in these clubs, the professionals who are training day in, day out, the less change they have within their group. They're not spending time trying to get to know each other. They have more time to spend on the higher order stuff. So one of the interesting examples Ben often talked to was the idea of the Queensland State of Origin team, who pick most of their players have played together at Melbourne Storm, Brisbane Broncos, or North Queensland Cowboys. So they know each other. The Melbourne Storm, Cameron Smith, Billy Slater, Cooper Cronk had played together. They're the spine of the Storm and the Maroons. So they had a massive advantage against New South Wales, who were always picking the best 13 players in form at the point of time. Normally from 10
playing them out of position as well.
Playing them out of position from 10 different clubs, and they spend half the camp getting to know each other and probably doing icebreaker exercises. Whereas guys who played together 30 times, they know or 200 times in the case of the Storm guys, they know exactly what they're going to be doing, and it takes them to a different level. So they can focus on that higher and higher order task rather than going back to the beginning.
Well, that's a really good point, actually, being a Queenslander and a bit of a State of Origin tragic. It's something that quite dear to my heart. But you're right, if you look at some of the dynasties in terms of performance across those, you do find cohesion in key positions, whether it was back in the Laurie Daly, Ricky Stewart halves sort of combinations, or Wally Lewis, Alan Langer, and some of those where you get that that club cohesion and the consistency around key positions, it correlates quite highly with success of domination from one team. Interesting, because State of Origin is one of those things where the margins are rarely big.
Yes,
regardless of what the teams or the environment might look like on paper, and there's been examples, back with Fatty's Fortin's team in '95, and he had a bunch of literal nobodies that came through and were able to win. So it's interesting because sport's obviously one sort of laboratory, as you described it, and there's a lot of data, I suppose. There's a lot of qualitative in there that's, I guess, is the tricky bit. The financial world, which is obviously, the area you're more familiar with, and is arguably even more ruthless and competitive, particularly on a global level. How much insight did this sort of like sporting analogy version, did you learn a lot from that process? Did you discover things you didn't know?
Well, it was actually interesting because the origin of Ben's work was actually a guy from Harvard Business School called Boris Groisberg had written a book called Chasing Stars. That was actually analysing analysts in stockbroking firms in New York, which is actually broadly or has similarities to what we do as investment managers with organising teams of analysts to look at the world. I came at this partly from a communication perspective of how can I explain how good I think our team is and how I think it is different from others. The sporting context actually gives you the tools to communicate better. But the origins, if you like, the academic rigour came from work that was done on financial teams. And in a sort of quick summary of that, what happens in the big investment banks in New York is they have teams of analysts, very, very competitive. There's tens of banks out there competing for client attention, and every year they have this so-called all-star analysts. The clients vote for who they think the best analysts are in every sector. So here the data set was the top analyst in, let's say, the mining sector, or the top analyst in the tech sector, and what have you. And that the data set was looking at that year after year after year and where the analysts came from, and noting that when analysts moved firms, they tended to take several years to regain the ranking they'd previously had. So everyone thinks this is a business all about individual analysts, but it turned out actually made a big difference whether you were at, say, Goldman Sachs or Morgan Stanley or Deutsche Bank or what have you, and that you stayed there. And so there was a sense that there is more to the success of an analyst than their own brilliance. It's actually the infrastructure that surrounds them, and then if you like, the internal relationships and network that they have within their firm is incredibly useful to them, and they know how to, if you like, harness and exploit that. So when they get taken out of that environment, often as an individual star hire, like you see in the English Premiership a lot. Someone pays 50 million for a player and he turns out to be rubbish because he was actually good because of the guys around him, not simply his own skill. So that the origins of this were very much finance. And then I said, well, hang on a second, we now have a way of measuring our own team. And so we became Ben's first corporate client. The idea was, I said to him, can you look at us as if we were, he'd worked with clubs like Arsenal, he'd worked with the Crusaders, he'd worked with various provinces and rugby over in the UK and so on, and I said, can you analyse us as if we're one of them? And it was an interesting exercise. Yeah,
so that's in some respects, obviously, we're hearing, obviously, you found out things you liked because you were it's a public thing now, right?
Yeah,
but it's interesting dynamic. I mean, how concerned were you going into that you might find some things out. You might find out that you're maybe not as good. You might find out that there's some things about your view of the world and your teams and those sorts of things. Was that a concern, or was it more did you want to understand how good you were, or was it more understanding what makes good and how do you get better?
Yeah, it was interesting because I came across the work in 2015. I think it was, as I said, around the World Cup, and it resonated with me, but I didn't convince the others internally that this was a great idea straight away. It took a while, and Ben always jokes that he gave me all his IP in a phone call, and then I took, they thought I was I'd stolen all his intellectual property, and it was about a year and a half later before I convinced the guys that we needed to communicate this message better about the strength of our team. We'd lost a couple of people who were less important to us than they were less important to us than they were being portrayed in the market. And therefore, there was a kind of a dynamic that we were being asked a lot of questions about our team and how it fitted together. And we'd lost people, but we'd lost a lot of junior people, and we hadn't lost really anything as far as we could see it. We thought we were functioning equally well, and so there was actually became more of this sense of, well, how can we communicate this? Because as I said at the beginning, everyone tells you their team is great. So bringing Ben in to measure our team, I guess there's an option there. If the measurement didn't show us in a good light, we probably wouldn't have proceeded with being quite so public about the content. But it was a confronting exercise to some extent. So I sat down with Andrew, who runs our business, and at the time was just running the investment component of the team. But we had to go through every person who'd ever worked in the investment team, and over 25 years, that's about 75 individuals to have a team of 30 today. And so we had to sit down and we had to go every single person and who were they and how old were they when they joined as a proxy for their experience, and had they had direct experience and how much of that had they had and what did they do when they came in. So there was a mapping exercise, and you go through some of the people who probably you're glad had left and some you've been disappointed over time, but it was that took us a few hours to go through and bring all that data together, and then Ben took that away and measured us as I sort of referred to earlier, as if we were one of these sporting clubs, and applied the same metrics. The only difference being that the team grew in size. So if you were looking at a football team, it's always 11 players. But when you were looking with us, you had these periods where we added a lot of people, and by doing that, we often adding people very quickly dilutes what you have.
Well, it's going to have a direct impact on cohesion, right? Because, yeah.
So I'd worked at Platinum. I joined the company in 2003. I think there was 15 of us in the investment team, and by 2007 or 8, there were 30. So we had this rapid growth period. The saving grace at that point was that there was one big event you had to identify in that period, which was the GFC as it's described now, and we had identified that period. We had identified that event. Not in the exact way it played out, but we'd identified the risks probably by about 2004 when we still had a small team. And so by the time we got to that event, we did avert the crisis that affected many people, because we'd been cognizant of it. But by about 2011 or 12, we realized that we had this team that was much bigger than we'd had. At the beginning of Platinum it was 4 guys sitting in a room talking to each other. They'd worked together at BT before they joined. They had this really, really sort of close bond. And then we had 30 guys who were sort of sitting around in a room without any real structure. So actually what happened internally was Andrew had restructured the team back into these small groups. So very much like the business had been at the start, guys who could spin their chairs around and talk to each other. And he had done that because he thought that was what made the company successful. It was a really intense debate that was taking place in small groups. That's actually what a lot of the cohesion work, if you like, would show you, that working very intensely in small groups of people, with low turnover in these groups, will build you in time very high performing units, because the cohesion metrics will develop as quickly as they possibly can. So the cohesion metrics, your time spent together, the less people there are in a team, the more quickly that builds, low levels of external experience. And so as we repositioned the team, and as you look at the work Ben did here, as we restructured it, the cohesion levels sort of went, exponential is probably the way you think of it on a chart. Very, very rapid development of that within the group. So we knew there'd been periods in our development where things hadn't been as good, and you could see that in the data, and that's what I guess gave us reassurance that the data was pretty robust, and it was a worthwhile exercise.
I guess one of the other really important factors, particularly in the industry that you guys are playing in, is it's extremely competitive, and it's very money focused, and so it's the money is always a very tangible and very obvious measure of success, and that competition between individuals to be, the balance between being an individual star as opposed to team performance. How have you guys traditionally dealt with that, and did that change, or was there something you learn out of this?
I think it's part of we'd learnt this before, or redesigned the way we were doing things before we measured it. So this was all about that process Andrew went through with restructuring the team. The other thing, progressively as the business evolved, the rewards to individuals have become increasingly driven by the outcome of the team or of all the assets that we manage. And I think what you need to do in the business, what are we trying to do? So our job is to pick investments, and the way we think you do that is by going against the crowd. So we're trying to buy things that we think other people don't want to. In order to do that, you have to have a rigorous debate internally, because you are you taking a counter view to the majority of people. That's a pretty uncomfortable thing, first and foremost. But the chances are, if you just take a counter view for the sake of it, you will be wrong, because the crowd is quite smart. It's not perfect, but it's quite smart. So you're trying to find the holes in popular ideas. So one of the ways that we think you best to do that is by having this environment where people can challenge each other, where you don't feel that you are being challenged as a human being, if you like. You're being challenged as a professional, and that's part of what you do. But you need to create an environment where it's safe to have that disagreement, to have that debate. Call it an argument if you want, but it's a rigorous process. In the way our industry tends to structure itself, people either fall down the trap of trying to create internal agreement or consensus, and when you do that, you tend to dilute good ideas. And the alternative path people fall down is the competitive one, where people try and compete internally, and by doing so, they prohibit the flow of information or sharing of information. So by making the largest components of people's reward subject to the outcome of the team, you try and take away that risk that people are trying to look after themselves ahead of looking after the team. And ultimately, when we say looking after the team, what we really mean is looking after the clients, because it's the client's money that we're looking after. So the better the outcomes we get for clients, the better the people generating these outcomes. That's the better they are rewarded for doing that. And therefore, in order to ensure that people are sharing information, that they're challenging people's opinions, that they're cross-checking, that they're counter-arguing, that they're checking as many sources as they possibly can, and making sure we get the best outcomes.
So you mentioned also, though, that external experience is one of those areas that may be a little bit misunderstood or sometimes counterproductive.
Yep.
Obviously, you can also end up in a bit of a bubble, right? You can also end up in a situation where confirmation bias at a group level is really sort of taking hold. How do you guys counter against that? And was there anything in terms of the work with Ben that highlighted a flag or some sort of indication of that?
Yeah, look, probably in that period where we grew rapidly in the middle of what would be the last decade, there were some external hires with a lot of experience. You could see that statistically that had a drag on the metric, but you'd expect that given it's marked a negative. They didn't tend to last that long either. If you like, what we've found is we've tended to hire people from outside the industry, but with worldly experience, people from all sorts of countries around the world, people who've been engineers, medical doctor, actually, with medical science, software engineer, a whole range of backgrounds, life skills, understand business, but haven't been corrupted, if you like, by one particular firm's view of how markets work or a philosophy. Every fund management company has a philosophy, as we describe it, and it's very hard to unlearn a philosophy that you bring from somewhere else. And as we're trying to be more contrarian, if you like, than most, then we tend to find it's hard for people to unlearn what they bring to the table. So I think it's been on average, most of our hires have got very little fund management experience, and we always bring people in at the bottom as well. We never bring people in above people who are already there, and
that creates that sort of future incentive, I suppose, as well, does it? That people can grow and develop within the organisation. And
so we're trying to develop people within the system. So because, and again, if you think about a sporting team may have a style of play. You bring a guy in from a defensive club to play in an attacking club. That's probably the best way to conceptualize it. But you bring guys into the team, and they are mentored by someone with a few more years' experience, and they learn relatively rapidly how we think. But it's many years before you're adding a lot of value. And I've used it myself in hiring to expand our team. I really thought carefully about adding to my team and what the dynamics would be. But even through the interview process, I didn't look at anyone's CV till we were nearly at the end of the process, which people thought was very unusual. But what a CV does is it highlights. Well, people make a big thing about the best firm they've worked for. They try and draw attention to the best firm they've worked for, as that's obviously a badge of honor, if you like. But what they're really doing is telling you how great that firm is, not how great they are. And the big thing that Ben highlighted through the work to me was what he calls the Melbourne Storm mirage, which is when someone leaves Melbourne Storm, they get on the plane, and by the time they arrive in the next place, they apparently have forgotten how to play rugby league. So the idea that when you leave a very successful organization, what was actually the organization was making you look good. So, the lesson is when you're hiring people, either bringing people in who have the right character traits from another area and maybe adjacent skills. But when you're bringing somebody in who is very good, but in a poorly performing team, that's where you're going to probably get a better hire than bringing someone in who happens to be part of a very successful team. And so it's many ways it's similar to the way we look at companies. We're trying to buy companies that are misunderstood because they're going through some temporary or transient negative feature that we think will dissipate in time. So find a good guy, not in a firm that's allowing him to maximize his capability and maybe not rescue them. But if you've seen the movie Moneyball, that's what the Oakland A's was all about. Find talents that are, people are not paying for. The more that became public, the more that the metrics that were being used by the Oakland A's become used by everyone, and you have to find something else to get an edge. But I think with this cohesion work, it's make people spend time together, bring guys in without much prior experience and develop them yourself. That formula shouldn't be competed away. To me, it's a common sense approach that you can rely on but you need patience. I think that's important. You need patience. You're not going to get results in necessarily 1 year, 2 year, 3 years. You have to think. You have to communicate upwards. This is what you're trying to do. We're fortunate. We're a small business in the sense of there's 100 employees. The founders are still heavily involved in the business, and Andrew, who runs it, was there on day one. Liz, who's also on the board, was there on day one. Kerr, our original CEO, still in the business. So guys who've worked together themselves, they have that cohesion, and therefore they understand this. That's whether they knew that's what they were doing or not. That's how the business has been built.
Yeah, but patience it's an interesting point you make, because that's such a key part of. I mean, you guys recognise that in the analysis work that you do, right? In terms of, when you're looking at taking a stock position or an investment decision, you always have a timeline on that, right?
Yeah.
But it's very difficult to bake that into a process, I suppose, when when you clearly have got that performance review scenario that you're going to have in an organisation where particularly if things aren't going your way, right? So how do you find, because particularly being a very contrarian kind of investment manager, Platinum's very famous for making some pretty big calls over, various, you guys have been around a long time, but making some fairly large calls that have played out and sometimes have taken quite some time to play out.
Yes.
Has that patience and that understanding of how to be patient, did that really, did you learn more from that process with Ben? Was that something that he found consistently in creating that cohesion?
Yeah, it's interesting. I mean, I think that's baked into the way we think about investing. It's baked into the way the team has been built, and the team has been built this way. It happens to sort of line up with the way that the Ben's work sort of statistically proves that's a good idea. The patience, it's interesting. I mean, we have one of the biggest challenges is, the end investors. The tendency is we've got all these behavioral flaws, and I know you've done a lot of work on this as well, Matt. But the behavioral flaws that we have, we tend to react very much to short-term moves. We don't like losses. There's all these different behaviors that mean that unfortunately what happens to us as a business is that when we do what some might describe as a poor job, or you might describe as your early, or however you want to describe it, when things are not going our way, then you tend to find that people sort of lose hope and they take their money away. And then we tend to find that when we've done whether you call it a good job or a great job, or we've got lucky, when we've done well, people then tend to give us more money to manage. And it's the timing of that money coming in and money going out, which is it's really disappointing, because we kind of, for all we're trying to do to help people, they're then kind of the actions of the customers in aggregate doesn't help themselves, and it's a communication challenge.
It is, and it's one of the reasons why we're quite focused on it, because investor behaviour is by far the biggest. I mean, you guys obviously know about the Dalbar study and the data that's collected over many years to show that investment performance is by a factor of at least 2 times driven by how you behave as opposed to what you're actually participating in, and in getting people to understand it, because it's I guess it's an important thing to understand is that one of the problems with cognitive biases is you have them.
Yes.
And you can be aware of them, but you don't stop having them because you're aware of them, right? So if you don't use that knowledge to create frameworks, to create environments to stop you doing the things that you don't want to do, because you're going to do them because you didn't stop being human just because you studied it, right? Robert Cialdini talks of that really well in his book in Influence. He talks about, here's an example of where he gets basically gained by someone and he knows everything that's happening all the way along, and at the end of it, I won't, in case people want to read it, because it's a really, really fascinating story, but he basically gets to the end and said, and here's what I should have said.
Yes.
But I just bought it. And he's one of the world's experts in terms of how people can be influenced in terms of making decisions, but he's recognising the fact that, he happens to him all the time.
Yep.
And if you're not prepared for that and knowing that you're going to make those decisions and putting frameworks in place to stop that happening where it materially matters to you, then we're going to sort of keep making those mistakes. So I think it's a really important thing to recognise that at the end of the day, when you are, and from an investing perspective or a sporting perspective, doesn't matter, if you know what your goal is that getting the measurements right that is achieving that goal. And I think one of the things you were saying there earlier I find interesting, in that patience is an important part of that, is to say, because you know that you can't generate the result quickly.
Yep.
And therefore, if you look at the short-term performance of an individual or the team, you gave a really good example in terms of, you say you take the player of Melbourne Storm, and if you look at what happened with, say, Cooper Cronk last season.
Yes.
Now, he went to the Roosters and then initially early in the season, all kind of wasn't working out, and people were talking about, Cooper sort of, bringing Melbourne into, but you can't bring one player in and Melbourneise a whole team. Cooper had to find a way to fit into that framework, and obviously quite spectacularly by the end of the year, he did okay with one arm, right? So
he did okay with one arm, but actually even more interesting with that, there was 2 things going on. There was a lot of halfbacks changing within the league that year. So the penalty for the Roosters bringing in Cooper Cronk was less than it would otherwise have been, because other teams were going through change. But the other thing that happened, which Ben was fascinated by, and there's no numbers on this, but having Cooper Cronk on the pitch in the final, he actually understood how the Melbourne Storm worked. And I don't think there's enough statistical data to say what does it do for your cohesion or for your understanding of when you actually understand intimately the opposition, and he actually knows where Cameron Smith's going to run, and so he can tell.
Well, he'd know better than Cameron would, because
he watched him, and so that was fascinating there. But the patience thing throughout, whether it's investors choosing fund managers to invest, we've been in a bull market since March 2009 globally. So any fund manager who has an approach like ours, which is to try and put risk management ahead of trying to make high returns, has probably suffered a little bit for that by the caution, which pays off in a downturn. We haven't had a downturn for 10 years. If you look at 10-year numbers today, many of the firms that have done the best are the ones who've taken the most risk and bought assets at the bottom of that market and been very aggressive. So we actually have to go back 12 years to say, well, how did your manager behave in 07, 08, 09? And probably to have some more robustness, how did your manager behave in 2000, 2001, the previous one? And is it the same team? And are these people still, at least not necessarily the same individuals, because obviously 20 years is a long time for individuals to all be there, but how's the team evolved over that time? And is the core group of people still similar? So we see it, listed companies, they're always under pressure from their boards, their shareholders, etc. There are some terrible examples amongst the largest corporates in Australia of just constant churn and change and massive underperformance, because they're always looking for short-term results, and taking companies of 10, 20, 30, 40, 50,000 people the challenges we're talking about with an investment team of 30-something and how long it takes to absorb new people into the system and growth. Think about the complexity when there are 10, 20, 30, 40,000 people, and even mapping them would be difficult, but it's an impossible task. And some of these companies could take 10, 15, 20 years to fix, but no one's going to give them that long. And that's one of the biggest challenges with this stuff. You need an entire, if you like, stakeholder map of people who are all willing to accept that this is something that once broken takes a very long time to fix.
Yeah, well, I guess one of the key things we try and reinforce with clients, particularly in terms of the process we go through in terms of trying to find investment managers in particular, is to say at the end of the day we've got to be really, really clear about what it is we're expecting them to do, and how do we manage and measure that, right?
Yes.
And so getting the measurement right is key, because it's very easy to be distracted by measures that are, particularly quantitative things like relative market performance, for example, that don't necessarily give you the entire context, right? So, Lotto is by far the best example, right? Someone wins, right?
Yes.
It's designed for someone to win.
Yeah.
But getting an individual person in a predictive way to win Lotto, we know is impossible, right?
Yes.
So there's the allure of the fact that, someone's got to win it.
Yep.
Could be me, and therefore I'll do that. But the reality is, if your goal is to create compounding in terms of wealth, there's a very specific way to do that.
Yes.
And again, I'll go back to the Dalbar study as a really good example of is you don't have to look too far into the data to say, yes, there's an outcome, and that's the law of large numbers playing at the extreme that says someone will get that.
Yes.
But the reality is that's not you.
Yeah.
Or it's extremely unlikely to be to you. And so really, one of the key things we look at when we look at something from an investment perspective is saying, look, the whole point of having a investment philosophy and a portfolio strategy isn't to generate the best returns. Yeah. It might seem like that's the obvious thing to do, but the reality is the best returns often look like the worst returns and vice versa, because it was all going great until it wasn't.
Yeah.
Whereas if you can just do really good returns and compound and protect capital and the effect of that over time, and again, using the Dalbar study as a really good example of that is that you're so far ahead of the pack as a result of that. Getting that measure right's so much more important than where do you track at a particular point in time.
And that's I guess it's the Warren Buffett, try not to lose money, and rule 2 is rule number, let's go back to rule number 1. The one I find fascinating is that you take an event like a Brexit or a Trump-Clinton election, and at the end of the day, these things were coin tosses. I mean, I think in both cases it was 51, 52% of the vote one way, 48, 40, probably like our election will be here as well. Very, very close numbers with a effectively impact that follows where some people are positioned slightly on the right side of it, others on the... No one says, what would your portfolio have done if the coin had landed the other way? They only know how your portfolio did the way the coin landed. Now, that was a 50% or whatever number probability beforehand. So it's the wrong way to measure short-term performance, but it's the only way to measure it, because you can never know what would have happened if the other had happened. So it's a very, very difficult thing for anyone to assess a portfolio manager over even over 15 to 20 years. Luck can be a very, very big driver. Luck, good performance drives media attention, drives status, drives a sense of, call it genius, and then all of a sudden you've built this amazing thing on the back of maybe tossing a coin or maybe skill, and no one will know for so long. And many of these managers who have that success may end up retiring before you ever find out if they're right or wrong, because the rewards are massive. So it's a very, very challenging minefield for the individual to try and assess.
Well, it is without the right measure, right?
That's right. Yeah.
Which is what I find so fascinating about this work that Ben's been doing and that you guys have linked into, because it offers a bit of an insight, if you like, into what are the things where, if there's a rule to performance, you need to be able to see it everywhere, right? It needs to be very highly correlated. If there's any causality, then it's got to be almost, perfectly correlated. So it's very difficult to put quantitative measures on qualitative things. But the interesting thing I found about that work is it seems to have been able to do that very predictively relative to really much else that I've seen. That the Moneyball thing is a good example of that sort of thing. But again,
Yes.
it was very statistically orientated, right?
Yeah.
It was how many times do they get off the base, and it was all
Yes.
the things you could really measure.
Yeah.
Whereas Ben's work was much more about that cohesion sort of scenario.
Yes, and putting a measurement to something that he knew from experience, but it was almost like the measurement came after the insight in a funny kind of way. The Crusaders, who won our award for the best team over that time, we spent time with the coach down in Scott Robertson down in Christchurch, and great tour of the facilities, and then we went across. We presented them with a cheque to give to charity of their choice to acknowledge their long-term success as something we sort of wanted to acknowledge. And but it was interesting just chatting to him, even the way they bring young people in and how much they make they make the debut special. So they're thinking again, not thinking through Cohesion specifically, but thinking as we bring new people into the first team, how do we do that? And you'll see it with the All Blacks as well, where they have lesser games and they blend the team with a collection of very experienced people with some young guys, so that the young guys get up to 10, 15 appearances quite quickly, and then they understand how the system works and so on and so forth. And then you look at rugby in Australia, and it's a mess, because we've got people, the club game it's had problems. It's coming back in Sydney, but it's had problems. But then this going from 3 to 4 to 5 Super Rugby teams. So down here in Canberra, the Brumbies they did come out as the most successful Australian franchise, but they were a dynasty for a period of time, and you had Gregan and Larkin playing together, and then playing for the Wallabies together. You had a period where a lot of the Queenslanders were very strong, and Horan and Little and so on. And as the talent got diffused to 5 instead of 3, it became a lot harder. The Wallabies was harder to form, and they haven't really had that. And Super Rugby in this country is now a mess. So it's going to take years to repair. Whereas Ireland basically built a blueprint which was effectively copy what the New Zealanders do, and they ended up beating them last year. So it's it's all about the system.
Yeah, well, Australian rugby, to follow up on that point, Australian rugby fell into that classic trap of trying to get the best athletes, right?
Yes, yeah.
And even with some of the rugby league players that they've brought in, and individual players, whether you talk about Quade Cooper or Israel Folau, or you can look at the spectacular performances of individuals, but what clearly we haven't had in the Wallabies now for a very long time. Yet we again go back to when the Wallabies were such strong forces, and you did have that, whether there's a Queensland, the Liner and Far Jones and Horan and Little, kind of like that right through to the Gregan and Larkham sort of days, and even guys like George Smith. You do start to see it looks relatively obvious, I suppose, once you sort of see that. What has it done for you guys from a business perspective when you're going out and looking at, because essentially you're doing the same thing from when you're going and analysing companies and organisations. Has it given you, do you think, a better insight? Are you able to apply that in some way?
I think it's interesting. A lot of what we've always done is spend a lot of time around change, because change creates uncertainty, and often it's a change or a setback that causes people to not want to own a company. So a lot of the opportunities we invest in come from change, and I think without thinking of it as in the context of cohesion, I think we've always thought that is the question we've always asked is this transient? And so if it's some simple thing like it's a factory fire causes a production issue or something, well, that's not breaking the fabric of the company. Is the company robust to what has happened to it? So I think we've always thought that's probably part of what we do, but we've probably not thought of it in such a concept. So, and again, it's obvious we often discount things because there's too much change of people or there's inconsistencies and so on. So I think intuitively a lot of this is part of what we've always done, but I think it heightens our awareness to it. A lot of the analysts found it fascinating. Again, the sporting context brought it to life as well, because people saw, I know that example, and as Ben always says, although the guys always ask questions about what that means for their own sporting achievement when they were in the second 15 at school or something, but the sporting thing resonates with people, and there's so many examples, and I've watched Ben present a number of times, and just some fantastic presentations, because showing examples from key games and key moments and why things didn't work, and all of it sort of comes to light. So we can apply this in both in the sort of how do you hire people, how do you develop people within your team, and as analysts, how do you think more about the companies you're investing in?
Well, look, I mean, I could talk about this forever. It's a fascinating topic, and I guess with some pretty important sporting activities coming through this year. Given the insight you're sort of talking about, I'm excited about some and very unexcited about some others because I don't think the cohesion's necessarily there. But look, thanks for coming and spending this time. You guys have got a site set up that there's a little bit more information in terms of this, so we'll put a bit of a link to that if anyone wants to have a look at it. But but I want to thank you guys for going through this process, because I think, to me, the spotlight that you've put on this work, I think, will actually, help a lot of people benefit from understanding a lot more of how to use what has traditionally been more qualitative and, let's say, fuzzy areas, to give them that sort of, I guess, framework that they can now rely on and say, what, we really are onto something with this, and we can have that patience, because the likelihood of it rewarding us down the track is actually relatively high, rather than let's just throw it all out and get the superstar in to fix it, because it's surprisingly very rarely works. Yeah,
so the quick fix is probably not something to recommend. It's, build something and ask, if someone's in a role in a firm, it's make it clear to your manager or make it clear to your board that you're going through this transition, and it sets a level of the performance is constrained by lack of cohesion, and people above you and stakeholders need to be aware of that and how long it takes. And that's something that people tend not to do. People try and bluff or cover up or race to fix things, and it actually causes more problems. So anyway, it's been great talking to you, Matt. Really enjoyed it, and hopefully there was something in there for all your listeners. I really appreciate the chance to talk.
Thank you.
Thank you.